On this episode, Mehdi Amini, founder of American Mortgage Group, drops by. He has a direct-to-consumer mortgage company that has originated over $1 billion in mortgages over the years. He has reinvented himself and his company several times to create and keep his success. We discuss topics such as marketing to self-employed borrowers, getting advice from billionaire mentors, and why you should simplify your product offering. Listen close as we discuss Mady's secret to success, which includes upgrading his car from a Honda to a Rolls Royce, and how to not be ruled by fear and emotions, but ways that you can learn and prosper from your mistakes.
Welcome to the $1 Million Mortgage Experience Podcast. Listen in as CEO Jon Maddux of FundLoans reveals tips, secrets, and origination ideas to fill your pipeline with $1 million opportunities.
Welcome to the show. I'm here with Mehdi Amini. How you doing, Mady?
I'm doing great. How are you, John?
Doing great. It's finally sunny here in San Diego again. I know that we shouldn't complain because we always get it, but so I've got to ask, I don't know anyone else who's got a Rolls Royce, but you have a Rolls Royce. There's got to be a story behind this. Tell me what the story is.
You know, I'm an entrepreneur.
Okay.
I've been an entrepreneur since I think 13, 14 years old.
Wow.
At 18, I started, my own network marketing, telecommunications business in Excel.
Okay.
And so I don't come from money. I didn't have money. And I always, back when we had magazines, opened up the DuPont registry and looked at all the cars and looked at the MTV Cribs back then is the only thing we could dream of, and looking at cars. And I started to love cars, and I didn't have the money to buy them. I had a Honda Civic, 87, I remember it.
Yeah.
And I lived in La Jolla, so I grew up around money, but didn't have too much of it. And I always told myself that one day I'm going to be able to afford a car like that. And so through my entrepreneurial, career,
right,
for decades, 20 years now, I always got an opportunity to get a car, and Rolls Royce was it. But it feels really good to be in a Rolls or a Benz, and you feel a certain level of accomplishment.
That's awesome. Kind of reward yourself for things that you've done, and just and is it that different from like the Honda? Do you feel like
it feels a lot better than the Honda? For sure.
That's cool. Right on, man. Well, I don't want to. That's a cool side of you that no one else that I know has. But I know that's not the that's just the outsider. That's just the front. So not that you're fronting or anything, but that's just the first thing you see when you see Mady, pull
Absolutely.
up and stuff. But that does say a lot about you. So you run a successful mortgage company. Tell us a little bit about your mortgage company.
The industry has changed. I've been in the industry for decades, and being in the industry prior to the implosion,
right,
I think we all got accustomed to, mortgages, and then we had to reinvent ourselves when the implosion happened with the NMLS and new products and QM, and how to, look at taxes and, how we looked at investment property owners. And so for the last 10 years, I've been producing, running a direct-to-consumer branch.
Okay.
I've been into internet marketing for a long time. We want to create, we believe in the direct-to-consumer approach. Technology is big. And so in the industry, what I've always tried to do is, perfect the product, the process, and build the right people that we can exponentially grow with. So I've had that philosophy for a long time. Started in the industry, with a lead generator where we were spending millions of dollars per month and creating leads. So I really got to develop, and scale units and volume prior to the implosion. And now I guess my vision is to, I saw that same, right now, the same growth, a change that happened in 2007. I think it's happening now, where we're going from in-the-box lending, where we're going from FHA, VA, everyone thinking about purchases, to where our industry as a whole, with my mortgage company or anyone else's, that we got to grow, we got to change,
you got to reinvent.
And that's what, my hat's off to you, John, because, we partnered up, and I see that with your vision, you guys saw the non-QM, a while back. A lot of us are hard-headed, and we don't want to look at that change or see the new product coming. And so I advise everyone out there, don't be that person. When people come to me,
yourself,
you have to. I got into reverse mortgages. We became one of the top funders in reverse mortgages.
Right.
And today I see that with my mortgage company, I want to make it really simple. I want to make sure that we're focused on 6 core products that are going to meet the needs of the American people out there.
That's good, man. So you've reinvented yourself. You've done, you've been successful in each area. So you went from, agency loans, government. Now then you did some reverses, and that you were successful at that. And then now your target is the non-QM, and your aim and focus is all on that. So I mean, as a loan originator, I know you run a company, but I know you dabble right in some origination yourself. Do you do that still?
Yeah, part of I like the show Undercover Boss. You can't ask anyone to do anything if you can't do it yourself. I think you have to understand the needs, what the experience of the consumer is going to be, right? So you have to know it yourself, and you got to believe in it yourself, and you have to believe in the product.
Right. I kind of think of you got to keep your finger on the pulse of what's happening. And if you don't do that, you lose touch. A lot of owners, or people that are, the president, CEO, whoever, can be a little detached from the day-to-day stuff, right? In the nitty-gritty. And when that happens, you lose some of the... It's kind of like you think of, it's just stupid, but you think of the Alexander the Great, right? He was bold, but he was in the trenches with his guys. He was fighting next to him, shoulder to shoulder, leading the charge. And I always admired, Alexander the Great and all that. I don't think that was a good movie. But I love that quote. He said, "Fortune favors the bold." I don't know if that was really his quote, but I love that quote about him and about what, kind of what he stood for. And I see that in you too. And so tell me when you went from the shift from reverse to non-QM. How long ago was that?
2 years ago.
What caused you to see the change? What was the telling factor? Was it the changes in the industry?
I think there's a lot of change in the industry. I think, we don't want to let go. When I started off in 2007, we were selling the option arms. One of the things that I didn't let go quick enough. And it was a product that I wanted to hold on to. All the conduits were, the implode meter was out, all the mortgage companies were going out, and we were submitting files, and banks were going out, and we didn't fund any of those deals. So I never wanted to, get so emotionally attached to a product or say, I'm only going to do purchases, or I'm only going to do this. I wanted to always be open-minded and learn, where is the industry going? What are the products? What are the needs? So when, you look at interest rates being the lowest, when you're looking at people being able to get a 3.5% FHA deal, or being able to purchase a home, or the VA products, these are all our government products that we had to run with for the last 10 years. And I think they're still great programs, but we've had a run now for 10 years. And so as interest rates went up, and as we're marketers, and I'm out there marketing digitally to see who's raising their hand, that's something that I watch out for. Is as long as in my business I never get worried.
By that, who needs financing, kind of?
Yeah, I mean, I say there's only one. The day that I'm going to get worried in the mortgage and real estate industry is if people are not raising their hand needing help.
Yeah.
And what are they needing help for? And so, when you looked at my segue into the reverse mortgage industry, I saw an issue. I saw that, when the QM happened and we're looking at tax returns, self-employed or retirees had an issue qualifying for loans, and that the senior community, there's 10,000 seniors turning 62 every single day.
So many.
The baby boomer generation is growing, and they have a $1,200 Social Security check. I knew that as an entrepreneur 20 years ago.
Right.
That I wasn't going to live off of that.
Right.
Now, the average mortgage is ironically $1,200 a month. So here you got individuals that are equity rich, cash poor, no savings at all.
Right.
And they have a little bit of equity in their home. Was that going to be a need? And that's what got me into the reverse mortgage industry. Now you have proprietary products through, RMF and a lot of companies that are coming out with these amazing products where people are still under the misconception when you say the word reverse mortgage, John.
It's a bad word.
Are you going to lose your house?
Right.
And so I looked past that
Yep.
when I see a need and I can look at the statistics behind it, and I know that they're not losing their home, that they get a 5.90%.
They're government loans.
Government insured
It's
by the
really, you think
by
the government's
HUD?
going to give them a bad loan? I mean,
and it meets a need, right? And so you start learning and you drive that product and you know you make money and you help people and it's a feel good product.
Right.
So I saw the same thing happening as rates went up. As I saw that with the reverse mortgage industry, I'm like, what are we going to do with all these self-employed borrowers?
Yep.
Now here we got a few aggregators, a few banks, not a lot out there, and they're running around with their rate sheets and they're coming into your mortgage company and they're saying, hey, let's sell non-QM.
Right.
And I saw that word non-QM is like the word reverse mortgage.
Right.
And if the
like
word
what
does that mean? And then
Yeah.
and then the response for a lot of account executives out there is bank statement loans. And then the response you get right after that is, oh no, we're back.
Yeah.
And so it's fear driven. It's
Sure.
not knowing, the fear of unknown. How are you going to do this? How are you going to structure this? What does this mean? So
Right.
2 years ago, when everyone was, Eric Morganson from Angel came.
Great guy. Yep.
You and I talked about the non-QM. I just wanted to learn from you guys. I wanted to know, hey, what are you guys doing? How do you qualify? Why
Right.
do you believe in this market? And you've set the standard for 5 years. You've been ahead of this thing when we weren't doing it at all. And so to really come in and see the thousands and tens and thousands of people that I personally, doesn't take a rocket science. I'm not the smartest guy, but I know that every time anyone in the mortgage industry, if you're listening to this, if you've done loans in the last 10 years and you got those tax returns in front of you and you looked at line 37 and it was a negative and they're self-employed,
Yep.
you didn't even call that borrower back most of the time. So
Right.
a lot of people don't. Oh, here's another self-employed.
Right.
When you looked at the tax returns and then all of a sudden you saw a Schedule E of real estate and you saw that they were writing everything off on that 71,000 page tax code that we have, which is
Right.
Americans, we want to write things off, right?
Yeah,
If
it's
you're self-employed.
it's the law.
We want to go from the E quadrant to the self-employed quadrant so we can start writing things off so we
Yeah.
can control our income. And here are the wealthy individuals. I mean, I think it's 42 million self-employed
Yeah.
individuals in the United States, 15
and growing
million
every day.
in California alone.
Yep.
And so they're writing everything off, but they
Right.
have money. And banks today
And they're
are not
spending
lending
money
it to
and
them.
they're creating jobs and they're giving it's a good. I think our country was founded on, and the reason why the tax code's there is probably because they wanted to encourage entrepreneurship, right?
Yes.
Encourage people to start up and create jobs and create new products, innovate and all that stuff. So it's I think it's cool that we have that tax code, but it also it creates a need. It does. I mean, that's why we're in our niche.
When
That's
you
why we're
have
here.
to go back and someone actually didn't make the income that they did, but if they want to buy a $2 million house, they actually have to show more income than they made
Right.
to reverse engineer qualifying for a loan. Where were we going to go? And
Yeah.
so one of the things I looked at as a industry expert is I knew that there was going to be a problem when especially in the state of California, when the average home price in California became what the county limits were with FHA, or Fannie Mae.
Sure,
And
caps all the loans out
so I
there,
think
yeah.
when you say non-QM, it's almost like a cheesecake factory, and it's taking you back 10 years back. It's using trigger words that you don't know what they are, what non-QM means, what are bank statements. But I think what I learned in the last 2 years was to go into the In-N-Out concept,
Sure.
In-N-Out burger. What are the top products in the non-QM? And to sum it up, the self-employed,
Right.
the 24-month bank statements that you
Sure.
guys
Yeah.
you guys fund for us
In 12 months,
12
yeah.
months.
Yeah.
P&L, where a self-employed borrower could take a 12-month P&L and you can look at the real net and signed P&L by a CPA. That's remarkable. And number two is the debt service coverage ratio loans, the investment properties, not looking at the borrower's income, but looking at the property income. And
Absolutely.
you guys have funded deals for us where, all we got is the lease and the mortgage statement, and you don't even need mortgage statements on all the other properties. And someone with great credit and great LTVs getting amazing rates in comparison to Fannie Mae or anything like that. And they don't have to go through that qualifying of, looking at at their tax returns.
Right.
So,
because it's really about the income of the property at that point.
It is.
It's not about can this borrower, does the property, and so many banks, Chase Bank, B of A, I can name them all. They all in the commercial division, they all look at that. They all look at, does this property, on a multifamily or a commercial loan, strip malls, all that. They look and see, does this thing debt service?
Yes. It's the first time that we have an edge now as mortgage professionals on the depository banks.
Right.
They're the ones controlling the deposits, but they're telling their self-employed borrower that doesn't have a 700 credit score. Today in America, banks are saying that you don't have a 700 credit score, so therefore you can't get $1 million purchase.
Or you don't have the tax, you don't have the income.
You need to be at a 43% DTI. You need to have a 700 credit score, and you need to put 20% down.
And it almost seems like, in essence, it's somehow the self-employed group, demographic, they're getting punished for, they have a higher interest rate for not claiming more taxes.
Well, let me correct you. We got punished for 10 years, and we're no longer getting punished,
right?
Because now we're actually getting. I'm able to.
But the rates are slightly higher. Fannie's not doing it. The government's not doing it. Banks aren't doing it, but we can. So they're not being. I guess they're being punished still by them, but not anymore because people can find us. But what I think of, I talk to entrepreneurs a lot, and sometimes they can't get over. They go, "I want the rate that's being advertised on Bankrate, and I want to not have to stroke a check to the IRS and the state for $200,000 every year, because." And they want them both, right? And you can't have that both right now. You can have a decent rate, but it's not going to be the lowest rate on the planet because we don't have bank. We're not a depository. FundLoans is not a depository bank. If we were, obviously we'd have way less cost of funds. Instead, we have hedge funds that we, sell to, and private equity and REITs, and their cost of funds are more expensive. So, we have to pass that on to the entrepreneur. But what's interesting is that, some people think, well, I'm just going to claim a bunch of taxes and then I'll qualify for a mortgage, when that's like reverse thinking, because they're going to say, I'm going to spend $200,000 on my taxes, but then I'll save maybe $1,000 a month or $800, $600 a month on a mortgage that you're only going to keep for 3 or 4 or 5 years. It doesn't matter. It doesn't pencil out.
It doesn't.
Yeah.
If you look at the 650 in California or San Diego where we reside, if you look at the $650,000 loan amount or higher, and today the bank's going to 80%, really truly what is a jumbo rate? That was my third product I was going to highlight as jumbo, right? We want to be focused on self-employed. We want to be focused on debt service coverage ratio loans for our investment properties because of qualifying measures, and we want to look at the jumbo market. So let's get into reality, America. Where are rates today?
Yeah.
We for 10 years heard about the 3%, but again, we don't talk about the mortgage insurance that FHA charges. So
which
is
brings
it really there?
1 or 2% higher? Yeah.
If you're at 4.5%, 5% with the MI, where are we really at? Today you can get, a 90% jumbo loan. If you walked into the bank, what would the rate be at 80% LTV? Or do they do an investment property cash out to 70? No, they don't. They don't do. Do they do
80? We're doing it to 80.
And do they do an interest only? Simple interest option, which a lot of individuals in this bracket want to pay simple interest with their investment properties, or they want to do that as self-employed borrowers on a $1 million home. Or lastly, what do you do when you want to buy a home over $3 million? Some of your product and how we met was the jumbo product. When you walk into a depository bank on a jumbo deal, 3 to 4 million is their max. Even if you have the income, at one point, we had a client call us to buy one of the biggest homes in LA, and I called you up, and you called an insurance company and your hedge funds, and it was a self-employed individual, and we got a quote on a $50 million loan, and so I look at that as such a big opportunity that if you focus on what haven't we done in the last 10 years, and what are those products, let's start doing that now.
Right.
That gives you the vision and the clarity that you need to set your business up so that you're not letting the words like non-QM or bank statements or reverse mortgage or rates going up or, I'm stuck in my box. We're entrepreneurs. We got to think outside the box.
Yep.
And we got to have that vision and clarity so we can execute and grow.
Definitely, man. So we're talking about products. What do you see as different from the demographic of, say, a reverse mortgage, right? They're, elderly people who are retired or, they don't have an income stream. What do you see dealing with that demographic versus the non-QM demographic? Like, is there similarities? There's a lot of differences.
There's a lot of differences, and I would say there's a lot of differences through the W-2 FHA, VA, homeowner that you did a purchase or refi for.
Right.
You're getting a different caliber of individual.
Sure.
And it's a lot easier, I would say.
Easier to do a non-QM than a reverse?
Absolutely. I think the self-employed, I got shocked as we're training and developing our team and coming up with how we're going to approach the marketing all the way through, getting applications all the way through presentation and close. What we learned was that, the entrepreneurial type of individual we haven't been speaking with for 10 years.
Yeah.
So that's a shock in itself. And they're shocked that you're able to actually help them out, because if you've told someone for 10 years that you need their tax returns, they don't even believe or think they can get a loan.
Yeah.
And so I think the non-QM compared to reverses, they're both educational. You got to get educated. The reverse mortgage market, everyone was against it until AAG started spending $10 million paying the senator to start advertising on TV. And as a lead purchaser, I wasn't able to, every single, they have Fonzie from Happy Days.
All those guys,
those guys. And so all that marketing built the awareness where now people are actually going online and searching. So now you can actually get seniors that are raising their hand.
Sure.
And it's a feel-good product because you're saving those seniors. So there's a lot of similarities because you're qualifying with common sense lending for a senior that hasn't been able to get a product. The self-employed, totally different type person. You find a primary residence in there, and then all of a sudden, it's much easier because they have 2 to 3 investment properties.
Yeah.
And then they
typically have someone in, their own accountant.
Yes.
They typically have someone that can assist them in finding their sometimes they have their documents right at their fingertips, which, I remember being an originator back in the day where you'd have to go to their house and they'd look through boxes and, they'd have to pull out their tax return that they stored up in their attic, and it's different now. It's a lot different, and especially with things like Maxwell and
technology. We're able to, John, take an individual that raises their hand saying that they want a self-employed loan to getting an application to getting all their documents uploaded within seconds into a system that tracks that and follows up with them.
Tells them how urgent it is to get that doc in.
It's amazing. And we can move so quick and we could fund loans really quickly, and the demographic is more aware. They do get their documents to you much faster. And I believe that you're building a client for life. These are the types of people that once you take care of them, they will be coming back to you to do more loans.
Absolutely. I mean, it's amazing when people get turned down somewhere else and then you say yes, how much they become a believer in what you do and how much they want to refer you people and how much they want to, just there's so many things that are great about, helping people out when they get told no in other circumstances. So what advice would you give, say, an originator watching or listening to this? What advice would you give an originator that's focused on the maybe they had reverse business or maybe they had agency business and now they are saying, gosh, I'm late to the game or I'm late to the party. How do I get into non-QM? What kind of advice would you tell them?
I don't think you're late to the party is the first thing I would say. That's fear-driven. Fear is a liar. Don't listen to, those thoughts. I think an average human being has 75,000 thoughts per day. And if you listen to those thoughts all the time and react emotionally to those thoughts and start comparing yourself, doubting yourself, is this industry going to be done? Am I going to make money? I have to make all these changes.
Right.
Then we're going to be caught up in our heads. So the first thing I'd say is learn how your brain works and don't be emotional and don't listen to the naysayers or people that are telling you that the world's coming to an end or your product is not going to be around.
Big crash coming, big crisis.
We all want to talk about it.
Right.
You don't get paid to talk about it. So I would talk about building your belief. Build your belief in the industry. Get the knowledge that you need about the product. Sell yourself. You got to sell yourself is my advice. If you can't sell yourself on the product, on the need, and you're not convinced, then it's very easy to waver. You got to have unwavering faith and belief and purpose that you have a driven purpose in wanting to help people. And if you're in the industry, if you're going to make the implosion. I remember when the implosion happened, there's a lot of doubt. There's a lot of loan officers, mortgage guys that went back to doing their day job. I remember opening up my company right when everything crashed, and I got involved. Didn't know what product, John. I didn't know what product. I didn't even know where I was going to get leads. And in fact, I told my guys, we have no products. I don't know what we're going to do, but we're going to get on the phone and talk to people, because sooner or later there will be a need. And if we work hard, we'll be in front of the wave. Yep. So this is a time to look at your goals and decide whether you're a loan officer, whether you have a branch, whether you're a broker, whether you're direct to consumer. It doesn't matter. As professionals in real estate and loans, you got to develop a new plan. And I think the new plan, we're going back to 10 years ago, not only in product, but I think this is where the entrepreneurial spirit comes up. I think this is the chance that you either need to be with a non-QM bank where you have a branch where you're banking non-QM loans, or you have to be a broker. And build your broker model, and this is under the Department of Real Estate, under your CFO license, and we haven't had that opportunity in the last 10 years. We've all been working with bankers and
the broker kind of went away for a while. It
went away. There was no advantage of it, and I think it's back. And I think the people
it's crazy to see NAM and AIM, all that stuff just exploding now.
It is, and I think it's timing. I've learned real quick from a billionaire, Kenny Trout, one of my first mentors, that timing was everything. So this is when it's quiet like this, or everyone's not in traffic. Kenny Trout said, you want to be the guy going the opposite direction. And so I think that there's a lot of individuals.
You're in all the people in the traffic, and you're cruising, you're just laughing. You're like, oh my gosh. But it's so true. And you're looking, you're the guy in the traffic. You're watching the other guy.
In your Rolls Royce, they're watching you.
And they're watching you in the Rolls Royce.
I look at the 52. You go west, there's no cars going. You go east, there's a lot of traffic.
There is. You got to figure it out, right? You got to be the smart one.
Not that many going to La Jolla. Everyone else going to East County. No offense, East County.
No, it's true. It's true. So you talking about a mentor. Tell me more about who's a big influence on you. This guy that you said is billionaire.
I've had to
watch any shows that inspire you. Do you have any mentors that inspire you? What? Tell us.
I've been inspired. I was born in Iran. I came to the United States when I was 4 years old. I had bombs flying over my head through the Iran-Iraq War. I was born the year the revolution happened in Iran. I was scared for my life. And so when I came and lived in La Jolla and San Diego and had that freedom and was able to, really build my life, I put all my energy into school and basketball. So my first mentors were my basketball coaches that taught me how to really work hard.
Fundamentals.
My inspiration was my mom and dad that showed me that they can leave everything behind and give me an opportunity here in the United States. And it was my obligation to, as the only child, to produce and be able to be the best that I can be. And through life, you have different mentors in different seasons of life. I think my first mentor, was Al Thomas, and multi-millionaire, and Kenny Trout. And, they taught me a lesson. And back then, it was right when Robert Kiyosaki, the book came out, Rich Dad, Poor Dad. And he was doing his seminars back then, and they were talking about real estate. They said, get into real estate. And they taught me, the second thing they taught me was residual income, passive income. And what they were teaching me is they said, Mady, you could either plan A, work 40 years for your boss and make your boss rich. Plan B, work 5 years for yourself, make yourself rich. Now, if you fail at plan B, you have 35 more years to go to plan A. And so thinking about a rich dad and a poor dad at that time, 20 years ago, I'm almost 40 years old, the internet was just getting plugged into the wall with AOL.
Right.
Deregulation of telecommunications was happening. We didn't have the smartphones back then. We didn't have the marketing channels that we have today in digital world.
We didn't have ways to get into someone's mind, like brain, like today,
Instantly.
like in front of their eyeballs, like that, for very little money.
And that changes the world. That changes everything. And even by not having those things, he said, you never want to be in the E quadrant. You never want to be an employee. You never want to have a job.
Yep.
Job stands for just over broke. They pay you just enough so you don't quit.
Right.
And you're going to do just enough so they don't fire you. It's a mutual relationship. And he's like, you want to be in the S quadrant, and you want to be self-employed, and you want to be able to have unlimited income potential, and you want to be able to do that. So that was the first time that I really had mentorship, that I had to decide what to do. And I dropped out of college. That's not the Persian thing to do. We're supposed to be a doctor, a lawyer, go to a UC school.
Sure.
I grew up really quickly. I was able to build a successful business in the telecommunication, multi-level marketing, entrepreneurial world.
Yeah.
I met a lot of great people. I met, one of the individuals that I worked with that got me going into Bill Lyons, that got me going into the mortgage business.
Yep.
Bill was a great inspiration to teach me technology, marketing in relating to real estate.
Right.
Kenny Trout, how many billionaires do you know? He just won the Kentucky Derby.
Does he have roles?
He has many things, many roles.
Many other
at that time, he's $1.4 billion. You can look him up, Kenny Trout.
Yeah.
And we were the youngest company to go live on the New York Stock Exchange. I saw billionaires' vision, and it was totally different.
Yeah.
It was different, and that's where the roles and the cars and the houses and the dream came.
Right.
Was, wow, that is possible.
Sure.
I don't need to be an athlete, or I can actually do that by being an entrepreneur. So I think that's from my coaches to my parents to just living in America, John.
Yeah. The land of the free, man.
This is, the land of opportunity.
Yeah.
I know we all have our political views, and things can get pretty tough out there.
Right.
And we all unite well when we get attacked. As Americans, we do a great job of uniting. But, we live in the greatest country in the world. And we have opportunity. You could be who you want to be.
Right.
With that being said, you got to always be willing to be mentored. And so at 30,
willing to work.
So at 38 years of age, my mentors, some of my mentors are my peers, people like yourself, where I can talk with about, areas of expertise that I don't know too much about.
Definitely.
I don't know everything, and I'm not scared to getting help and getting coaching from great people that can help me improve myself and grow.
Right. Speaking of mentors, there's a guy out there named Gary Vaynerchuk who's very popular in the social media stuff, and he's I look up to him. I've watched his stuff. I've watched less lately, just because I've heard a lot of his stuff. It's he's got so many great points, right? And sometimes you hear the same thing over and over again, which isn't bad because he's getting his message out there. But one thing that he says is that you shouldn't buy a primary residence. Now, as a mortgage owner of a company, like a CEO of a mortgage company, and as a originator, I've seen the wealth that's been created by owning a primary residence. And I've also seen documentaries where, in the past, there's been communities redlined out of homeownership, and that they've suffered generationally for not owning a primary residence. And so the message that he puts out there saying, you shouldn't own a primary, you should maybe buy an investment property or blah, 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 as knowing what it takes to buy an investment property, which takes a large down payment, which most people are never going to have. The advice, I think, is bad advice, and I don't know, I don't blame him for that. But as a mentor, I think some people should listen to some alternative advice about that. And one thing that I believe, and one thing that's happened to me over years, is I've created my own wealth from, buying a primary residence, having that appreciate, and then buying another property and then renting out the house that I bought, because you can put only 5% down sometimes, or even less when you buy a primary. But when you buy an investment, you got to put 20 typically or 25% down. Rarely can you do an investment property at like say 90 or 85 LTV. But like, what would you say to someone like that out there that's telling millennials or telling people that, you know, owning a primary residence is not wise?
Wow. You know, buying real estate is wise. Paying rent is not wise.
Right.
You know, getting the interest deduction is wise. And if you look at the long haul in the last 10, 15 years, look at what property values have done. Yep. I think people that say that, they've lost something and they haven't gotten over it.
Right.
And so having a primary residence, you know, I you know, buying a home, when the implosion happens, everyone's looking for the right time. So if you listen to those people that say don't buy a primary residence, then they say that you're not going to make money through it. But I believe there's 3 benefits of owning a primary residence. Number 1 is the American dream. You got to own a home. You got to have the white picket fence. You don't want to be
stroke a check every month somewhere to live.
I have a 4-year-old and a 6-year-old. I don't want to be moving every day.
Right.
And millennials as well. What if you can buy a home and rent the rooms out to a few friends? So my mentors, my billionaire mentors, the first thing they told me to do is get a primary residence. The second thing they told me to do is get more investment properties.
Absolutely.
And then repeat it over and over again.
Yeah.
Now, again, if you look at the people that lost money, if they made the right decisions and got in the right loans, look at their asset today.
Yeah.
It always comes back. There's more millionaires and billionaires created in real estate than any other industry. So
that's right.
I say go get a primary residence, buy your investment properties, and never limit yourself. You know, I'm working on deals right now that are with a B, you know, $1 billion deals, $168 million deals. And some of these $168 million or $1 billion deals are just as much work as the $100,000 deals. So in order to grow, you can't limit yourself and you can't be fear-based, but buy your primary residence for sure.
Definitely, man. I like that.
Especially
I'm glad
now.
you agree. Yeah, I'm glad you agree with that because I think it's something that's being spread out there that's not true. And just the facts are, you know, if you look at a graph, even a 5-year-old could look at a graph and tell you, you know, it's going up, you know, from 50 years ago till today, the price of real estate has gone up. Like there's no question if it goes up or not over time. So that's definitely something that I think people should look at.
Which tells you one last thing is that the individuals, the self-employed, the investment property owners, people in the jumbo position, if you look at it, we have so much equity right now.
Yep.
So much equity in the United States that's been untapped.
So much.
Go ask them if it was wise to keep their primary residence and not let it go.
Yeah.
On average, you're seeing, 30, 40% equity. Now, go ask those same people, look at their retirement account through bear and bull markets in the last 40 years and what it takes to actually get even in your money in the stock and in your retirement accounts.
Yeah.
Where you're going to create your retirement is real estate.
I mean, if you look at how much equity is untapped, like the other day I was driving through LA, I was driving through some of the nicer areas of Brentwood area, and I just saw house after house after house after, I mean, thousands of houses. It's the same in San Francisco. It's the same in Miami. It's the same in Washington and Bellevue and different other, cities. You can go on Redfin, and I encourage people to just go drive the streets or go look at Redfin and look up how many homes are out there. Imagine, every one of those people could either, be self-employed and not have a mortgage. You can go and get data on which one of these properties do have a mortgage, which one of them have a private mortgage, and refi them. I mean, there's so many ways in the jumbo sector where there's a need, and someone probably had a missed opportunity somewhere in there. So, I mean, I'm with you there's so many ways to, if you just roll up your sleeves and work hard, there's so many ways to make money in this mortgage business, but you got to pick a product that's hot, that's moving, that's in need, where the people are raising their hands and they're saying, I need money, I need mortgages. Any last advice that you would give someone that's looking for, like, how do you create leads? I know that, you guys have been successful, but how does your company get your leads? Or tell us a little bit about how you guys originate. What's been your secret to
digital
success?
Marketing for decades has been, buying leads, Google, Facebook, driving a product, figuring out exactly how to do it digitally, from direct from them raising their hand to getting the app to uploading all the documents to funding a deal.
So you're a believer in the digital marketing?
Big time. Internet has changed the world, and that's the easiest way to get to anybody. I've done every type of marketing that you could think of, radio, TV, bus benches. You can't beat, paying per lead and creating a lead of an individual. And then with technology today, you can take them through the process very quickly, and you could build your business not only in your local area, but all across the United States. So I think digital marketing is huge to always be up on your game as far as what to do and how to build your business.
You got to know where your borrower's looking, right? Like I love that Gary Vaynerchuk says when he was a kid, when he had a lemonade stand, that he was looking at the people's eyeballs, like in the cars when they were driving by, trying to see where they were looking, and he saw like they were looking maybe at a stop sign or they were looking at, certain areas. And so he then would go put signs. So you got to know, I love that because you got to know where your customer's looking and where their eyeballs are, where their attention is. And on the internet, you can easily find, where your demographic, where their attention is being pointed to or where they're at. And then you can put targeted money behind that. And I'm sure that's kind of what you guys do is that's probably ways. I mean, that's great ways for you to figure that out. It's like you wouldn't put a billboard, next to like the biggest church in America. You wouldn't put a billboard, for something but bad, right? Like maybe you would, but like, you know what I mean? Like you would find like certain demographics where people are, and then you'd put, like on bus benches, like bus benches are probably not the best marketing for like a luxury mortgage because, people might not be looking at a bus bench, for a luxury mortgage, but they're probably great for FHAs or other government loans. If you're trying to market to veterans, you're not going to, you're going to maybe go somewhere where there's, more veterans and where their eyeballs are.
VA hospital.
Yeah. The perfect
UCSD.
spot, right? Yeah. So, good advice, Mady. Last thing I like to ask all my, all the people that come on the show is, as entrepreneurs, we've gone through, great successes and then we've gone through failures. I know that, any successful entrepreneur has had failures. It's not about how many times you fail, it's how many times you get up. We all know that, but what's your favorite failure that you've had?
Favorite failure that I had is the telecommunications industry, Excel Communications, putting my heart and soul into a network marketing business and that business being sold off and us, all of our incomes being, disconnected like long distance service was. And so that got wiped out. And I had to do a lot of soul searching right then and there, and I didn't know what to do. And that's where Bill Lyons, I started looking at a lot of network marketing companies, and he took me to the university club and he sat down and said, look, I want you to take a look at this business. And what he had going on was internet marketing and digital marketing, and I believed in that. I had built 20,000 entrepreneurs across 4 different countries with Excel, and it was a industry move that I was making. It was a big change that I was making in my life, but I believed in what he was saying, and we got involved and built a pretty successful company and executed on that. So that was the biggest failure in my life, and I've made plenty more, with success.
That was probably the biggest one where it made a huge shift in what you did.
Me. Yeah, it made me really to look at myself seriously and think about what I was going to do and really get focused in. So that was big, but with that came the biggest encouragement and success in my life. So it seems like right when you make the biggest mistakes, right around the corner, if you don't give up, is where you see the biggest benefits and you see the biggest growth. And I think through being an 18-year-old, an entrepreneur, quitting school, and all the challenges that I thought were big then, and getting a Movado watch and getting my first Honda Accord, and you fast forward it to 38 years old and you look at all the riches and all the stuff, that starts to wear off. It doesn't really mean anything anymore. What is your driven purpose as an entrepreneur? And what you see is that there's a lot of failures, that there's not too many moments that you can just say, hey, it's always been all good. And as entrepreneurs in the mortgage industry, going through the implosion, you get tested.
Yeah.
And I think you sometimes think you're the failure, but there's certain things that you can't handle, you can't help, and it's not in your hands. And that's where you got to stay calm, and you got to have belief and have faith. And I thank God for that every single day, that he's given me the strength. It's all his glory to be able to, execute and grow. And I really feel that everyone in the industry, I really mean this, whether you're a real estate agent, you're a mortgage professional, I think you should be able to get paid on real estate loans. I think you should be working under the Department of Real Estate. I think you should be able to do commercial construction, non-QM. You need to pick those 6 products, and you need to be an entrepreneur again. And we're one of the only ones that are self-employed and can be paid $10.99 left in the state. And so
now
take
you're giving
advantage
away all
of
your
that.
secrets, Mady. I love it.
Oh, I'm all, transparent.
That's awesome, man.
That's where everyone should be.
I love it. Thanks for coming on, and
thank you.
Appreciate you.
Thank you for everything you've done for my organization and helping us out, and being an industry leader in the non-QM. You guys are the my wife likes to shop at Neiman Marcus, but you guys are the Neiman Marcus, the Nordstroms of the non-QM industry.
Thank you for saying that.
You guys create amazing service. Getting back to our team all the time on the deals. You have the speed. You have the jumbo product. You definitely niched out the market with what you guys do here. So
thank you,
I
man.
commend you and Chad for that, and I thank you for the opportunity and allowing us to partner up with you.
Awesome. Thanks, Mady. Thanks for watching. Please like, share, and subscribe, and we'll see you next time. Thank you for listening to our podcast. If you guys are looking for more content like this, we have a FundLoans YouTube channel where we give away more tips, secrets, and origination ideas. You can also email us at info@fundloans.com. And if you've made it this far, I think it's safe to say you like our content. So please subscribe, share, and send us your scenarios. Let's fund loans together.